Okay, so our session today is going to be on scalping. I've had a lot of people ask me, "Hey Doc, can you please do? I want to do some of these scalps that you guys are doing when you're trading live, and I just don't feel comfortable, so I'd like to know a little bit more about them. Can you please do a session on scalping?" So here we are. And I've also had a lot of people ask for a session on the ladder or the DOM, the depth of market. So we'll do that next weekend because they'll go a little bit hand in hand because you can use the ladder when you're scalping. It's not 100% necessary. But sometimes it's nice to have because it can give you an extra entry or exit signal. But anyway, basically, what is scalping? So scalping it's a strategy in itself, right? So some people, that's all they do. That is their strategy. That's how they trade. They don't trade like we do, and they don't swing trade, and they don't take long. They scalp all day long. And whether they're scalping, some people are scalping 2 or 3 times a day just at the open at the bell, and then you have people that are scalping 100 trades per day. It just depends. And scalping is pretty much just it's a calculated entry and exit, and your intention is for a small, quick move, right? So let's say you were scalping on this carve. Okay, I think this was Friday, and you wanted to scalp this nice big fat green candle here with the good corresponding volume. You saw that it pulled back here, but you don't really know what's going on with it. It doesn't have a catalyst. It's just moving on momentum, and traders are thinking that it's going to short squeeze. So you don't really want to get in for a full normal day trade. You just want to just scalp, right? A little less risky because you're not trying to ride the whole thing and hold it and ride these pullbacks and do all of that mess like you would in a normal day trade, right? So you just want to get, basically you're looking to get a little piece of the pie. You don't want to take the whole thing or half of the pie, or you just want to just get a little piece of the pie, right? So you're, once this thing's just rocking on up and the volume is there, it's present, and it looks like it's going to continue on up, then you just grab just a little piece of it. So that's what scalping is. You're getting in and out with quick profit, and you don't really care what happens afterwards, right? So let's say you got in here and you got out here right before this resistance level. Do you care that it went to $42? Well, you shouldn't on a scalp because that wasn't your objective. Your objective is to get in and out quick with super fast profits, right? And like I said before, you just want a small part of a big move. A lot of people look at this down here and say, well, this 27.64 and this thing ended up running to $42. Man, I wish I could have gotten a part of that. Well, do you think maybe you could get 10 or 20 cents or 50 cents somewhere in that big move? Well, yeah, probably. If you look for the right setup, you can for sure get in there for a scalp, right? Or at least 2, 3 scalps, maybe 10 scalps. Just depends on if you're watching it and catching it at the right time. You might be able to get in there for several scalps versus just buying it. Here when this big volume came in and holding on to it the entire time, you can do that too. But that's more of a day trade, that not necessarily a scalp. And again, with scalping and any other strategy or any other question you want to ask 10 traders, like I said, oftentimes you'll get 10 different answers. So some people think that that a scalp only lasts 2 or 3 seconds. Some people think that a scalp is anything under an hour, because some people look at day trades. Some traders think a day trade is something that you'll hold for several hours, right? And we do that sometimes. We will hold a day trade for a few hours, but I would say more times than not, we're probably not holding that long. So some traders would think what we do on a consistent basis in our channel, the way we take trades, that we're scalpers, right? Because we're getting in and we're hopping out a lot of times, $1.50 later. And some of these day traders, they're holding it all day long, or depending on what the stock's doing. So you kind of just have to go with your own interpretation of what you think scalping is, and it doesn't really matter. You can call it whatever you want. You can call it a short-term day trade if you want to. If that terminology is going to help you better. But basically, you're just wanting to catch a small portion of a big move, or you're wanting to catch when a bunch of volume pours into a stock and you start to see that big fat red or a green candle forming, like we do oftentimes with the stocks that we're looking at, right? And you want to catch that move. That's what I'm doing, and that's what a lot of scalpers are doing. So how is scalping different from just a normal day trade, right? What we normally do? Well, the first thing that makes it different is you have less exposure, right? You have less exposure because, on some of these day trades, I'm choppy. Okay, well, let me know if anyone else is having any issues with, I'll just keep this up here, with my microphone. So basically, how it's different than a normal day trade is, number one, you're not holding it. You're not riding these pullbacks here. You don't want to ride like a big fat pullback on a day trade. On a scalp, right? That's more of a day trade type thing. So you have less exposure. You're in and you're out quick. So you're less likely to catch a knife, right? Versus when you're holding on a day trade, you could certainly catch a knife. So the exposure is less. You're not holding this trade for 30 minutes or an hour or 3 hours or 6 hours or whatever it is, right? Let's compare it to even a swing trade, right? How is it less exposure than a swing trade? A lot of people think that scalping is real risky. It's really not that risky as long as you're taking the trade at the appropriate time, just like anything else, right? So with a swing trade, it can actually have more risk than a scalp because you're in the trade for such a longer period of time. So let's look at what can happen. So let's say that you took a swing trade in early February, right? February 10th. And then we all saw what happened to the market after Valentine's Day in February and March and April and May. So how would your swing trade have looked there? It would have been pretty rough, right? Well, and why was it rough? It was only rough because of the market conditions. So you held the stock longer, therefore you had more exposure to what the market could do, if that makes sense. So that's how it differs. Because I've had people ask me, Doc, when you're taking these scalps, it looks like you're just doing a day trade, but you're just selling it early. Well, no, not really. These scalps, they tend to only last for a few seconds or maybe a couple of 2 or 3 or 4 minutes or something like that. We're not holding them longer term. Your intention is to take profit quickly or you want to exit quickly if the trade's going south. It's not one that you're going to let go red on you like you would a day trade. If you hop into a day trade and maybe you hopped in a little bit above support, you're going to let it go red a little bit because your stop loss is down there below that key support level, and that's okay. Well, you typically don't want to do that on a scalp because most of the time, if you're getting into the scalp at the appropriate time, you will rarely see red. If you're hopping in on this big fat green candle, right, and it's forming and you're seeing the volume is just pouring in and this thing is just exploding up, then you're less likely to see red, right? More than likely, as soon as you hop in, a lot of times you're going to have difficulty getting in. You're going to put in your order and it's just going to blow past your order and you don't get filled. But anyway, that's what the difference is. And once you get up here, you can have this set to sell at this resistance level. You can have it set to sell wherever you want, a certain increment, whether it be 10 cents or 30 cents or 50 cents, whatever you think about that particular trade. All of that's going to vary with each trade, of course. Or you can sell right when you start seeing the first pullback versus holding the pullback like you would on a day trade. So that's your intention. You want to take profit fast and you want to exit fast if the trade goes against you, right? Another thing different about day trading versus scalping is when you're day trading, you're typically wanting to buy the stock at a low price, right? And you're wanting to sell it at a higher price, right? So if we see a news catalyst hit and nothing's happened on it yet, and there's not a lot of volume yet, but you can see that volume's starting to come in, and you take that trade. Well, you're buying low, right? And your intention is to probably hold that a little bit longer to see how much you can get out of it, right? Well, on a scalp, here's what makes them, what does make them a little riskier is you're buying high, right? So this thing, was down here. Whatever that level is, I can't see because I have this on. I'm going to take this off. Let me know if anybody has any issues with hearing me, so I can show you guys the screen. So, buying low would be like maybe buying down here, right, in pre-market. Well, when this is already here, are you buying high? Heck yeah, you're buying high. We normally wouldn't do that on a day trade, right? That's FOMOing in. We're FOMOing in on this big O candle here. Well, so that's the difference. So when you're scalping, you're typically buying high and you're selling higher. Okay, that's our intention. Whereas in day trading, you're not wanting to buy high. You're wanting to buy low and sell high. Scalping, you're buying high, selling higher. Okay, which is a lot of what people's strategy is. Whether they call it scalping or calling it momentum trading, whatever you want to call it, like that. I always refer to this one guy with Warrior Trading because A, I like the guy, and B, most people know who he is, so we have that in common, so you kind of know what I'm talking about when I mention him. But that's his whole strategy. He wants to buy high. He buys high and he sells higher, right? But is that risky? Absolutely. And this is why we scalp. And this is why I scalp. A lot of people ask me, Doc, why are you scalping this? You got in this trade at $20 and you exited out at $21. You only wanted $1 out of it, and it went to $27. Why didn't you stay in it? Well, that wasn't my intention, right? That's not the way that I trade. That's not my strategy. That doesn't mean that you can't do that. If that's your strategy and your risk management plan says that that's okay for you, then go for it. And I've told many people in the channel, hey, when I hop out of these scalps, that doesn't necessarily mean that it's done, right? I'm hopped out of it because that was my target. That's what I wanted to get. That was the money I was looking to make on that particular trade. So also something that's different, scalping versus day trading, is because you're not holding the trade very long on a scalp, you can actually go against the trend, right? So if you're in this downtrend here, most day traders would not want to trade long on this short-term downtrend, right? They're going to want to just wait until they see a bounce. Well, as a scalper, you're not going to be in it long enough for it to really matter. So can you scalp this move here? Absolutely. Just scalp the heck out of it, right? So, that's a whole other thing is you can go against the trend. That's okay. You can go against the market sentiment. No big deal because you're not holding it long. You're going to be in and out seconds or at the most minutes. Okay, so, there's another thing. Let's take a look at, see if we can find an example on this particular chart. Do I not have VWAP on here? No, I do not. Let me add, one second here. Let me add VWAP on here, guys. Give me just a moment. Okay, so let's look for a VWAP break. Okay. Here is let me find an example here. Well, there's not a great example on this particular one, but I'll be able to explain it anyway. So let's say, how many times have we seen a stock break VWAP, but it doesn't hold, right? It ends up falling back below VWAP, okay? We've seen that many, many times where it just, let's say that none of this happened after this first green VWAP break here. None of that happened after this. Let's say that it broke down back below VWAP and just sold off. Well, would you take advantage of that move on a day trade? Well, probably not, because you could take an aggressive trade, but if you're going to take an aggressive trade on the first break of VWAP without waiting for confirmation candle, then you might want to be considering just doing a scalp on that, right? And so most day traders are going to miss that move. Well, scalpers won't miss that move. They'll go ahead, if they want to take an aggressive scalp, and they'll go ahead and scalp it as soon as it breaks VWAP. And then let's say it started pulling back here, right? Well, as soon as it starts pulling back, boom, they get out. And yeah, they only made, whatever it is, 10 cents, 20 cents, or whatever else. We're going to talk about that. Some of these scalpers will go, doesn't mean that you need to. You need to trade your risk management plan, right? But some of these scalpers, they'll go in much heavier because they're only looking for a certain amount of pennies, whether it be 10 cents or 20 cents or whatever. So they're loading up heavier on shares. So if you have 5,000 shares and you make 10 cents, that's $500, right? You make 20 cents, that's $1,000. 10,000 shares at 10 cents is $1,000, right? 10,000 shares at 20 cents is $2,000. That's not chicken feed if you can make that in 15, 20 seconds, right? So these scalps can really add up. A lot of people don't like scalpers, and they say, "Oh, you penny flippers," and all. I don't care. They can call me whatever they want, or call you guys whatever it doesn't matter, as long as you're able to make green. That's what matters. That's what you're in this for. So don't worry about what other people say about you being a penny taker or paper hands or all this other crap. Don't worry about that stuff. You worry about you and putting green in your pocket. That's all that matters. Don't listen to outside noise. So scalping would be a good opportunity to be able to take advantage of these VWAP breaks that you normally wouldn't take as a day trade. So those are some of the differences between day trades and scalping. Okay, and that doesn't mean that you can't use the same rules that you have for day trading and just do a scalp on it instead of a normal day trade, right? You can certainly do that. And when would we want to do that? Well, we might want to do that on a day where the market's tough, right? We've seen those days where we're just really unsure about what's going on in the market. So instead of taking a normal day trade on a setup that we normally would take a day trade on, well, we just take a scalp on it, instead. Options are very nice. You have different options for yourself. So if you, that's why those are my two strategies. I'm trading news and catalyst primarily, and if nothing's going on there, then I'll scalp. And I do great with scalping. You guys have seen, I'm scalping live, and y'all can tell whether I'm green on those scalps or not just by, I'll tell you when I'm getting in and you see that it goes up and makes some profit. Of course, there are some red ones, and that's fine. Those are going to happen, but we just want to minimize those losses so that the red ones are small losses and our gains are obviously bigger than what our losses are. So when am I, as me, Doc, when am I looking to take a scalp? Only reason I'm going to go over this because I know people are going to ask me. So, hey, Doc, when are you scalping? I have a lot of questions about, when I do stuff versus, when it's a good time to do this or a good time to do that. So when I'm looking to scalp is, when they're, first of all, let me go over some different strategies of scalping before I get into that. So there are people that will scalp technicals, right? They're scalping VWAP breaks of resistance. There are people that scalp on the short side too, right? When it breaks through support or breaks through a 200 EMA or whatever. So you can scalp technicals. You can scalp the prior day's high and low, right? You can look at look at the daily chart the day before and mark on there the high of the day and the low of the day. And you can absolutely scalp those, right? So just make sure and color code them so that you know the difference, because if you're going to do that, you're probably going to want to be looking at the pre-market high and the pre-market low. So make sure and just color code those, and you can do that with trend lines. Just make your PM highs and PM low, make those red or yellow or whatever, and then make your yesterday's high and low, make them green or something, so that you can differentiate what you're looking at. So other people will also, they're going to do, like I said, breakouts. They're VWAP and EMAs, things like that. They're going to do breakout of support and resistance levels. A lot of people will trade the opening bell, what they call the opening range. Okay, so where would that be? So that would be like here. So you had an opening range. So it came down here to this level, right? Which was actually what ended up being a support level at 32.21 when the bell rang. And then it popped all the way back up to this level, which is 38.51 or whatever that is. So they're trading that range, okay? So they're looking for a breakout of that range. If it breaks below this, then they're going to go short, right? If it breaks above that, then they're going to go long, okay? And they would have made money going long once it, started going back up, obviously here. So they would take the trade like right here, okay? Or maybe if they were smart and they had this resistance level drawn, instead of taking the trade here, because you don't have much upside here and you got a lot more downside, they would have taken the trade on the break of this resistance level and gotten a scalp off of that move there, and maybe even continued it on up to this 42.50. So opening range. So there's a lot of different strategies that can go inside of scalping. Scalping in of itself is a strategy, but you can have different strategies for the types of scalps that you want to take. So we just talked about just some of those, and some people are doing momentum scalps, like what I do. Okay, I'm not really scalping bell stuff. For me, it's really volatile, and I don't know which direction it's going to go. So, I'm a little more careful at the bell. But a lot of people make a lot of money scalping the bell because that's when you get a ton of price movement, right? You just have to make sure that where you guess is which direction it's going to go. That's the right the right guess. I just don't like to guess too much. But again, if your downside is much lower than your upside, then you can lose on some trades. Let's say you can, if you have the option of making a 2-to-1 risk to reward ratio, then you probably only need to win about 40% of the time, right? And you're still going to be okay. So, or 2.5 to 1 or 3 to 1, whatever your ratio is. So let me see where we're at here. So those are some of the different strategies. And people will even scalp a catalyst, right? Even a small catalyst. Let's say that so and so got a patent approval, right? And it's not going to just rocket on a patent approval. So what are you looking to do? Well, you're looking to scalp it, right? So you're going to just scalp this. What I don't scalp patent approvals, but they can be scalped. But I do like to scalp option alerts. A lot of times you'll hear on Benzinga, so and so has 1,400 contracts at the ask, and oftentimes that's going to make that stock pop a little bit. So I'll hop over to that stock. I'll pull it up real quick on my watch list, check it out, and if I see a bunch of volume coming in, I'll scalp it, right? But I'm not taking a day trade on it because it's not really like a catalyst, okay? But you can make money on those little scalps. Okay, so as far as I go, where am I looking to scalp? Where does Doc look to scalp? I'm just, like I said, I'm just going to cover this because I know people are going to ask me, well, hey, when do you do it, right? So again, when I'm already buying high, okay, that's going to make the trade riskier, right? I'm not taking a day trade where I'm already buying it high. So I'm going to scalp it 9 times out of 10, okay? I also tend to scalp, as most of you probably know by now, when a stock is just running on thin air, right? It's just running on momentum, or it's running on because, a handful of these guys on Twitter are jabbering about it and they're tweeting about it. I'm typically not taking day trades on those. I'm typically just scalping those things. So basically when it has a lack of a catalyst, okay, because I'm a catalyst trader. So when it has a lack of a catalyst, that's when I'll go to my second option, which is scalping. So, but that doesn't mean that you can't take a day trade on these. You just have to make sure that the setup is there and everything is showing you that it's going to go to a certain point, And I'm also looking to scalp when heavy volume pours in, right? But it's otherwise a pretty risky trade, So I'm looking for, this volume to just start pouring in. That's a lot why I'm following the volume all the time. Where's the volume at, right? Because that's going to allow for a price movement, which is going to allow for us to make money, So I'm always following that heavy volume. So, whenever that volume starts to begin, then that's where I'm looking to hop in that scalp, right? Maybe it happens at a key support level, whether it be VWAP or just a regular support level that we got off the daily chart, or from a trend line support, or anything like that, right? And then where I'm looking to hop out most of the time is either I'm sure most of you, now that we're doing this live trading, y'all are learning more how I trade, is I'm looking to either hop out usually one of 3 different scenarios. Number one, keep in mind, I already have this in my mind before I'm taking the trade. I already know, okay, I'm going to try and get this next support level, right? And if this next support level is 38.87 and I took the trade at 36.50, am I initially looking to get to 38.87? No. First, I'm going to be looking just to make sure we can clear $37, right? Because that's going to probably be just an organic resistance level because it's an even number, $37. then I'm going to be looking to break 38 bucks, right? And then I'll be looking to see if we get to this 38.87. So I'm looking for resistance levels that are just past previous resistance that I have drawn on the chart, organic resistance levels, price resistance levels, right? Or I'm looking to get out when things slow down. So, and we saw that happen to me a couple of times on my scalps on Friday. So I would hop into a scalp and the volume would start petering off. Let's look at down here. So see this volume here? So, you know, I hopped in and everything's looking good. Volume's nice and strong. And then boom, the volume starts tapering. Well, I'm out, right? I'm going to hop out of that thing. And a couple of times what happened to me on Friday is as soon as I hopped out of that trade, boom, volume came back in, it shot right back up and could have made a great trade. Was I disappointed in myself? No, because I followed my rules and I got out when I thought it was time to get out. I don't care that it went up higher. Do I feel like I missed out? Yeah, I do. But I also know that I'm better off not doing that, because keep in mind, we don't look at this at just one trade. Is that going to happen on 10 trades? Is it going to happen on 50 trades? Is it going to happen on 100 trades? You know, back to the risk management thing, right? Because you can't just look at these as one trade. So just because this stock did it doesn't mean that the other 99 stocks are going to do the same thing. So over 100 trades, that was the best decision, right? Because, you know, we're going to take those extra 50 trades and 100 trades because we're not just trading for today and then we're never trading again, right? So keep that in mind. Don't be disappointed in yourself because you left money on the table. You follow those rules, and if the rule says that, hey, this is when you get out, if that's your rule, then get out. Always follow those rules. Okay, let's see. So we already talked about a little bit that a normal day trader is going to hold through these pullbacks, and you know that's not what you're doing with scalps. You know, you're not going to do that. So what do we want to look for when we are looking to scalp, right? What are we looking for? Well, let me give you an analogy. I don't know where I heard this, but I heard it, I don't know, a long time ago. I didn't come up with it. But basically, what you're looking for is you already know about a fire, right? So you know, 911's already been called. There's a fire here. This thing's going crazy. So what you're looking for is when a lighter fluid gets poured on that fire. That's what you're looking for, right? So that's the kind of the scalping analogy that I follow, okay? I'm just looking for this fire to become an enraging inferno. You know, we're already moving up. Now I'm looking for a huge burst of volume to come in that's going to give me, along with other indications, of course, that's going to give me entry signal to take a scalp on that particular move. So that's one thing that, you know, that we're looking for. We're looking for that heavy volume with corresponding price action. You know, we all know that sometimes on these scanners, we all know that sometimes when volume's coming in, it doesn't always mean price is going up. Sometimes it's going down, and sometimes it's just kind of hanging right there. And the reason it's doing that is because even though there's a lot of volume, the price isn't really moving up or down. Well, what does that tell us? That tells us that you know, the bulls and the bears are kind of fighting, right? And there's no clear winner yet. So just because you have volume doesn't necessarily mean that you're going to take the trade. You're looking for corresponding price action, and vice versa. If you have good price action, you want to make sure that you have good corresponding volume, because you want to make sure there's a lot of energy in that move, you know, before you hop in, right? You know, we've talked about that before during our volume sessions. Okay, so some people, you know, they'll have scalping rules of where they're gonna enter, right? So they'll say, well, hey, I'm not gonna hop in on the very first big fat red candle. I'm gonna wait until, you know, there's a second big red candle, right? So maybe that's their rule. Some people have rules that says, hey, I'm gonna hop into a scalp if I see a candle that's 2 or 3 times larger than the previous candles, right? So that would be a pretty good example here. Well, by the time you know that this is 2 or 3 times larger than the previous candle, then you might be late getting in on that. So that's not a rule that I have for myself. I typically will get in early, okay? Because I don't want to wait and miss this move only to grab it on another possibly. So let's say this thing started green here, but then it tanked down all the way down to here, right? So I'm typically getting in earlier, but that's just a way that I scalp. So some people have other rules, that they abide by, whether it be candle formations or whatever. So you just have to figure out what works best for your type of trading style, right? And you always want to match, like I said, everything up with corresponding volume, of course. Okay, so let's talk a little bit about entries. So just what I mentioned just a minute ago, you can hop in on the first big green candle, like right here, right? And this is typically what I'm doing. I'm usually, if we have a big fat red candle like this forming, it's going to be very obvious what's going on. It's going to be nailing the scanner. The scanner's going to be going nuts, right? Over and over. CARV, CARV, CARV. So, that's a pretty good indication that, heavy volume's coming in. I'm looking at the chart, and this volume candle, this candle here is just blowing up. So I'm going to probably grab that scalp. I'm not going to wait for the next candle, because what we'll see oftentimes is when we have a huge green candle going up, a lot of times we'll see a big red candle going right back down, right? Because what's happening there? Well, you have scalpers, you have shorts coming in, you have people that saw it pop up there, they wanted to see what it did at the bell, they were holding pre-market, so now wow, it went up to $38, now they're dumping it. So that's why I'm looking to hop in on the first one. But again, make rules for yourself that work for you, okay? I'm just more of a fan of getting in on the very first candle. So, but it can be risky both ways. If you don't wait for confirmation, then you don't really have any risk, because let's say that you saw this red candle, so you didn't even take the trade, right? So there was no risk there. But if you did take the trade, then you have, risk that it's not going to continue on going up that way. If you take it before confirmation, well, you have risk that it's just going to stop at this level here when you hopped in right there or whatever and go right back down. So there's risk on both sides. But like I said, I'm more of a fan of getting in earlier, okay? All right, so let's see here. And, other entries are like we talked about before. You can be looking for technical entries, breakouts, breaking of resistance levels, breaking of VWAP, breaking of, the non-EMA, broke up above all the other EMAs, or the 50 EMA or the 100 EMA, whatever technical indicators that you like to use, you can look for those things to, provide an entry for you. Or provide an entry suggestion anyway. Okay, so make sure and just don't try not to do anything off of just one indicator or one indication. Try and match up as many different indications as you can, and if you miss the trade, that's okay, because likely there's going to be other opportunities. Even if it's not on this stock, maybe it's going to be on another stock. I'm sure you guys see that. Many times throughout the day, I'm missing trades. It just happens. You can't watch every single stock and be there at the exact precise moment, because when scalping, when you're talking about scalping, it's all about the perfect entry, right? You want to get in at the right time. You want to get out at the right time. So if I miss that entry, that's okay. There's many times somebody will say, well, hey, such and such is getting big volume, and I'll pull over and look at it and go, man, it is getting big volume, but it's extended or it's late for me, and I missed it, and that's okay. You don't have to push buttons all day long to be a successful trader. You don't have to take 5,000 trades a day. So don't worry about missing things. Don't worry yourself about waiting for your pitch, waiting for a good entry, because the more times that you wait for your pitch, the better you're going to swing the bat, right? You're just trade your rules, okay? So combine those different indications. Basically, is my point. Don't be afraid to have several different indications nodding yes, this looks good, right? You can use this, like I said before, the same exact entry signals that you would use for a normal day trade for a scalp, right? You're just looking to take profits faster. And like I said, maybe it's due to market conditions. Maybe you have to leave to go to work soon, and you don't have time to hold it as a day trade. So you're just going to grab some quick profit on it and bolt, right? So whenever you're taking a scalp at the appropriate time, whether it be key areas or big volume coming in, big green candle forming, whatever, like I said before, you shouldn't, if you're taking it at the right time, you shouldn't see any downside right off the bat, right? If you take it at the right time, you're taking it while the momentum's going up. So you shouldn't be red. So we'll talk about exit. Some people, I don't do this all the time, but I do it sometimes. On a scalp, sometimes when I go green, which is most of the time right off the bat, because I'm trying to grab them at those, at the right time. Once I go green, I don't let it go red. So even if I don't have much of a buffer, let's say that it's only up 4 cents from where where my entry was, then I'll either put a stop loss right there at my buy-in, so it hopefully removes the risk, so that because if you don't go red on it and you just go green, well, you didn't lose anything, right? So no big deal. Or you can just let it continue to play out, on your original plan of where you were going to take profit, at that point. That part is totally up to you. And I do both. It just depends on the trade, depends on the situation, okay? So you just make sure and do whatever is, going to work for you and whatever fits within your trading plan and your risk management plan, okay? So, we talked about when you're exiting, you can exit immediately after the first big candle, right? So if you exited, as soon as it starts to pull back, you just hop out, right? Instead of having a particular support or resistance level set or organic resistance level, or you're going to take 10 cents or 20 cents, you can just hop out as soon as you start seeing a pullback. Make sure that you're some people they'll set a stop loss below key support. Well, if they're taking a riskier scalp and key support, like let's say you took this scalp here, right, and key support's way down here, well, you probably don't want to risk that much on a scalp, right? So maybe instead of doing that, maybe your stop loss is like 50% of let's say it had a big green candle before, maybe it's 50% of that big green candle before, right? So, just set those wherever you're going to be comfortable. Lots of different scalpers have different rules that they go by, and I've seen a million different rules out there. So just make sure and set rules, that are going to work for you. I typically like to take scalps right around key areas. Okay, that way, hopefully, if it does start to go red at first, then I don't have a lot of downside, right? Because I'm taking those trades closer to those key support levels, whether it be regular support, key, VWAP, EMA, whatever it may be. That's where I'm trying to take those trades, because since scalps are a little bit more risky because you're buying high already, then you want to try and minimize the other risk as much as possible. So give me 1 second, guys. I'm going to stop this recording here.